Hi guys, welcome to my channel. My name is Diana Romanovska. I am a certified family law specialist practicing divorce in the Bay Area, California. Today I would like to talk about how to prepare for your divorce in terms of when it started. So first you file a petition or you file a response depending whether you're responding or initiating a divorce. And then what's next? So in my short conversation with a client, we discuss step one, we need to prepare an offer to the other side what the divorce is going to entail. How do we settle this? Let's assume it's not a complicated case. It involves a house, couple retirement accounts, bank accounts, child custody visitation. So first we need to find out if there is a house, who buys whom out, or if the house is going to be sold. The only way to determine if someone can buy the other person out if this other spouse's property remaining is going to be sufficient to buy out. For example, if the house is worth $1 million after all expenses, right? Let's say the value is $2 million, current market value, mortgage is $1 million, so $1 million net value. You're still with me, right? So $1 million is the net value that's going to be divided 50-50. So each party keeps $500,000. Now, we want the assets to be more than $1 million because we want the other spouse to have money to buy out the spouse who keeps the house from their separate property. So if they have $1 million net in value, $1 million in assets, then the other spouse can say, okay, you keep the house, I keep the other assets, or I pay you $500,000 down from these assets. So that's how we determine buyout. Now, retirement, we usually hire Moon & Schwartz. We don't just, retirement account is a deferred tax payment account where you cannot just withdraw money and give it to your spouse because penalty will accrue. And the exception is qualified domestic relations order where we have someone else prepare it, submit it to the court, and then the institution will roll over from one account to another whatever amount is owed, which is half whatever was accumulated during marriage, or if, let's say, there is a specific buyout arrangement agreed upon, then that amount. In terms of all bank accounts, we'll look at ideally the date of separation, how much money was at the date of marriage and at the date of separation. So if the marriage was long-term, then we don't look at the date of marriage. It doesn't make sense. So we look at the date of separation to see how to split it. Sometimes people don't want to look at the date of separation because there is no money left. Let's say they separated 2 years ago and the money is spent. Now we have to do post-separation accounting to see who spent what on whom, on community and separate, and we hire accountants to do this nightmare analysis of post-separation accounting, which I strongly not suggest doing when you separate. The way you can prepare is just to split the money right there and there and spend it on your personal expenses and one account that's community account use on community expenses. So that way you avoid nightmare of analysis for post-separation. So finally, custody. Start thinking about holiday schedule. Print out, some parents don't think about this, but it's important to look at holiday schedule. Look at what holidays are important to you. Christmas, Martin Luther King, and if you don't care about Martin Luther King, but you care about Thanksgiving, well, give the holidays you don't care about. If the child is in school and you know this is a holiday that it's going to be time off, give it to the other parent and say, but I want to keep those 5 weekends where someone in my family has a birthday, and you keep these holidays, but if someone in my family has birthday, then I want to have that right to take our child to that family event because you have all these other holidays. So it's little things that will, help to create some structure and not to leave it at goodwill, or if co-parenting is not working, at least it will give some structure into the daily life. I would think about creating a parenting agreement. Do not disparage. Think about holiday schedule. How many consecutive days during the holiday would you like to spend with your child? 5 days, 2 weeks? How much notice would you like to give that a parent? Simple things like that will make life more structured, easier, and more enforceable in court. At the end of the day, that's an agreement that both parents supposedly should figure out on their own, but it doesn't always work like that. So it's good to have something structured in place. So, and final step that is not really that someone likes is exchange financial disclosures. It's so important, mandatory step of a divorce. Usually without it, the court will not even grant a divorce. It has to be done, so an uncontested divorce. So these are two forms, FL 150 and FL 142. I have a separate video about it, so I'm not going to go into too much detail. I'm just giving you sort of an idea how I feel in, how to assess the situation and go through the high-level line items, and then we dive deep based on the problem. So if, for example, there are lots of assets, it's a problem, then we discuss that in detail. So I hope that was helpful. I will see you soon. Bye.